Are you looking to take your personal finances to the next level? Well, you're in the right place. Welcome to the Monday Money Tip Podcast, presented by I Was Broke, Now I'm Not, with your host, Joseph Sangle.
Well, welcome to the Monday Money Tip Podcast, presented by I Was Broke, Now I'm Not. My name is Joseph Sangle, and we are committed to your financial success. I'm joined, as always, by my co-host, Megan Hibbard. Are you fired up today?
I am. Happy Monday.
Happy Monday.
End of March.
It is the end of March.
Crazy.
Get fired up. We're on episode number what?
195.
We are 5 away from 200. What are we going to do to celebrate 200? We got to do something.
I don't know. We got to record it quick so I can.
Yeah, that's right. You have an impending arrival of twin boys.
Yes.
And you may have delivered them by the time this podcast releases. We're recording this in early March, trying to get ahead a little bit. Just in case. So tell everybody what we're going to talk about today. I'm excited for this.
Yes. So this is your current event episode. Current events.
No.
Investments. Sorry.
She's so excited about the current money event section.
I'm like, this isn't sounding right. I keep saying it. I'm like, that's still not right. I don't understand. I'm looking at the word too.
So you get the real and the raw of the podcast here.
Your current investments.
Yeah.
All right. So it's that time again. Once a year in March, we provide an update on your current investments and review your prognostications. Sometimes I think you just like saying that word.
I do that. I spell these words out just to, I want as many syllables as possible. Prognostication.
Thankfully, you said it enough times.
Everybody who's on the podcast today should try to say prognostication right now.
Prognostications.
Yeah.
Ooh. All right. For the last year, and then you share your thoughts about what you believe will happen in the coming year.
Yeah. I cannot wait to share an update on my current investments and review my prognostications for the last year, and then share my thoughts about what I believe will happen in the coming year. And so, before we do that, though, we're going to talk about one of the favorite sections of the podcast.
Now it's time.
Now it's time. What is it time for?
Our current events.
Let's go.
Now it's time to get caught up with our current money events.
The Monday Money Tip Podcast is sponsored by the Fully Funded Life Membership Program. The Fully Funded Life Membership Program provides all you need to begin winning with money and live a fully funded life. Fully Funded Life includes 4 key components: courses, challenges, coaching, and community. Courses provide financial education. Challenges help you make massive progress in a specific money skill. Coaching is provided by the Fully Funded Life certified coaches through open office hours held multiple times each month. All of the courses, challenges, and coaching results in an outstanding community that help equip, motivate, and encourage you to take your next financial steps toward your fully funded life. Fully Funded Life. Courses, challenges, coaching, community. All that's missing is you. Learn more and receive a special offer for Monday Money Tip listeners today at fullyfunded.life/MMT. That's www.fullyfunded.life/MMT. All right, well, in the current money events section, I want to talk and remind everyone who's listening to the podcast, you've heard me say this before if you've listened for a while, it's the 5-year rule. Now, when faced with turbulent times in investment markets and the world at large, it is helpful to be reminded of Fully Funded Life's 5-year rule. Now, if you're panicked about a bad day or week or month or quarter or year in the market, maybe some of your money shouldn't be at risk in an investment. Yeah. And this is because of the 5-year rule. We say 5 years because if you look at any period of the stock market for the last 80 or so years, any 5-year period, 97% or so of those periods have made money. That's a pretty good, if you're gambling, and it feels a little bit like gambling, then that's a pretty good gamble. I'm going to bet on that. Yeah. 100% of the 10-year periods have made money. So what I would just share with everybody is when we see the market collapse and run away, I am thoroughly convinced that is because there are people who have money invested that should never be invested in the first place because they panic about it declining in value. But because I have a 5-year rule, I don't have to panic about a bad day on the stock market. I don't have to panic about some cataclysmic event that has happened because if everybody goes to zero, money doesn't matter anymore. You know what matters? Food, water, ammo, holes in the ground where you can hide, right? That's really, I mean, if it all goes to zero and stays at zero, the whole world order is totally over.
Yeah.
Like it's going to be restructured. So I can't plan for that, but I can plan for ordinary stuff. And while it doesn't seem ordinary in the moment, when you say there's a conflict, a war that has broke out between Russia and Ukraine, well, that is surprising, but wars have happened for all of time. I wish people could just get along. I think Rodney King said that back in those horrible moments in L.A. when he said, can't we all just get along?
Yeah.
And man, what a great lesson he was saying. But there have been wars before, and there have been unfair wars. And there have been earthquakes before, and there have been financial chaos before. And so the 5-year rule allows you to recover from that. And I can name the ones that have happened in my lifetime, the middle 80s. I was born into horrible inflation and an oil embargo in the late 70s and then mid 80s. And we had real estate mess that just stunted the market, and interest rates on mortgages were 15%, 17%. Can you imagine?
That's wild.
And then in the early 90s, there's a recession. 97, there's a recession. And then we had the dot-com bust right after the turn of the 21st century. And then we had the 2007, 8, 9 financial collapse. And we had the December 2018 collapse of 22% when the Federal Reserve came out with really hawkish statements about cranking interest rates. And these things just happen. And that's why the 5-year rule matters. And so if you have money that's invested, I had somebody recently tell me that they had all of their emergency fund, all of it in Bitcoin. That is not wise.
That's alarming.
And they're like, well, it's went up. I'm like, congratulations.
Today.
You feel like a winner right now. But let me tell you, surely, at a day in the near future, a date certain, will show up where that revealed itself not to be wise.
And you can't plan emergencies.
That's right.
They're not.
You can't plan them, just like you can't plan for the decline in the value of that investment. So 5 years. And you don't have to do 5 years. We teach 5 years here, but we also teach set your own year rule. We've done ours with some math to help support it, but choose a number of years of, hey, if I think I need this money to replace a car, fix up the house, for savings, just for margin's sake, for the COVID-19 pandemic or something like that, make sure you have margin set aside that is not at risk in an investment. You will be so glad you did. Not every day will you be glad, but when that moment happens and everything collapses, you'll be so glad you did. 5-year rule, file that away and live by it. Get fired up. That's it for today's current money, not investments, but event section.
Yep. All right. Our success story today comes from Kelly. And 1 month after she attended a financial learning experience with us, she says, we are both very excited because it was the first time when we were on the same page with our finances. That was a big win. That is a big win. To be doing it together and not fighting against each other. We received our tax refund and saved our 1 month of expenses. That made us feel great. Then we had a family emergency. See, I'm guessing she didn't plan for that family emergency. And had to drive to Washington to be with my mom and take off time from work. That was the hardest thing since the meeting, but it won't hurt us financially now.
That's awesome. And it's just amazing, isn't it? I call these flip moments. These are moments when the switch gets flipped. And it's like you literally see money and you literally see your life differently. You just see it differently. And you realize these things that you've been chasing at the expense of future dreams. You actually recognize that it's costing you something, and it flips the light on. And all of a sudden it's exposed and you can see, we're sitting here in a studio and we've got lights here and there and there and there, and nice soft ambient light behind you. And I have one over here, right? When you come in here at night, and I've come into the office at night to do some Facebook Live event or something, and no one else is here and all the lights are out, I can't see much in here. And if I tried to walk through here, I'm going to trip. There's a lot of wires, a lot of stands, legs sticking out. They're trip hazards. But it's amazing. You turn on the light, boom, you can see it. Yeah. That's exactly what happened for Kelly. And that's what we really strive to do with this podcast, is to illuminate your view of money and your life so that you can live a fully funded life and actually see a way to navigate your way through it, through all the pitfalls, all the trip hazards.
Yeah, and I love that our last two success stories specifically have been focused on how it's helped their marriage and their family. And I mean, a lot of times we hear finances are one of the big issues for couples. And it's a lot of things
we hear and we observe.
Yeah, what they fight about
it.
and struggle about. But I think that this has been so encouraging and should be encouraging for you if you're in that season where it's a struggle with your spouse, that there is hope that you can be able be on the same page and work on your finances together, and it doesn't have to be the struggle.
Yeah, and the FLE, the financial learning experience, that's what we hope it to be, a catalytic moment. Mm-hmm. It cannot teach you everything there is to know about money, but it can be a catalytic moment, give you some hope, encouragement. And that's what Fully Funded Life was created about, is to actually help you along the way on the journey, particularly with the coaching. So fired up about that. So now we get to provide an update. Tell everybody what I'm going to update about.
All right, so it's that time again. Once a year in March, we provide an update on your current investments and review your prognostications for the last year, and then share your thoughts about the upcoming year and what we believe will happen. So
I'm so excited for this update. I wanted to share about my prognostications for last year, okay? I'm going to cover them briefly. In Fully Funded Life, I'm going to do a much more detailed one if you want to hear more details. But I said that there were headwinds and there were tailwinds to help 2021. I said the tailwinds were we had pent-up savings, we had an increased desire for travel, there was business expansion happening after the pandemic, and business profitability had returned. And a lot of companies had taken advantage of the terrible conditions to absorb what they call bad assets. Basically saying, while the news is already horrible, let's make it look really horrible and clean up our financial books. And there was an improvement in overall employment. Yeah. Now, I said, these are what I was prognosticating. This is what, the hedgehog or the groundhog, Punxsutawney Phil, he prognosticates the weather.
I don't understand why.
And we had 6 more weeks of winter, and so we're finishing that up. Thanks, groundhog. But I will let you know the daffodils are almost through blooming here in South Carolina. So headwinds that I said, these are the things that were going to hurt, is potential COVID-19 variants. Oops, that happened. Fuel prices. Oops. I said the current administration's focus on green energy is less friendly to fossil fuels. That is true. Inflation is peaking at us.
Yep.
And I said increased money supply usually leads to inflation. And, we had just flooded the nation with cash. And I said low interest rates on housing has created a spike in home prices and record low inventory, which is necessarily driving inflation. And I also said that another headwind would be delayed reopenings. If some reopenings were delayed all the way into 2022, it would put a weight on economic activity. So my prognostications, I had 3 guesses. You ready for them? Mm-hmm. Let's see how good I was. I said the stock market will be turbulent, but increase another 10% over the next 12 months. Well, guess what? It did increase almost exactly another 10%. Can you believe that? From the day I issued this projection, I said it would be at 34,542, and it was. That was almost dead on. Is that crazy?
That is crazy.
How did I do that?
I don't know.
That really is amazing. And my second guess was that real estate would continue to expand over the next 12 months. Was I right?
Yeah.
Oh my goodness, this might be my best prognosticating ever. And interest rates will increase by more than 50 basis points over the next 12 months. That did not happen. It should have happened. And the Federal Reserve is finally increasing interest rates this month. They're easily 6 months behind. Me and thousands of other financial advisors would say I'm right. Now, I could be totally wrong. These are all, after all, guesses. They're based on data, some intuition, and experience. One thing remains clear: over the long term, you cannot go wrong when you choose to invest in a group of well-diversified opportunities. And so I and the entire Fully Funded Life team welcome their thoughts and prognostications. I am going to pat myself on the back a little bit here because I have been totally wrong before. So I want to say, as a disclaimer, I am not a financial advisor. Therefore, I'm not bound by Securities Exchange Commission statements. But I do want to say this: I could be totally wrong. You should see a financial advisor. I'm just sharing what I think and what I am doing. Okay? What you do, that's on you. But I like to share it because I know that these are questions. We get these 10 to 1, any other question. So despite what happened in the stock market at the start of 2022, the past 12 months have been brilliant. And I made some investments over the past year. So you ready to hear what I did?
I am.
Let's go. We're going to put a little list up here so you can see them. If you're watching on YouTube, it'll help you a lot. I made some investments in a medical and pharmaceutical company called AbbVie. These are new stocks. Like these are, it's not where I expanded what I had invested in. Like I had not held these stocks individually before. I bought Airbnb. I felt like, hey, it's getting ready to reopen and go better.
They're doing some crazy things.
American Outdoors Brands. This is a kind of a hedge fund that has put together a bunch of well-known outdoor brands, including Smith & Wesson, Huck. It's a bunch of stuff. If you're into outdoor stuff, Old Henry knives, Schrade knives, some tents, UST, a bunch of outdoor stuff. Camping, hunting, fishing, that type of stuff. AT&T. I bought them. I bought them for their dividend only, not for growth. Meta Platforms, which is Facebook, I reinitiated a position in them. MongoDB. MongoDB is another brand that is, think of Internet Web 3.0, like the new version of that. One Main Financial is a bank. I bought it for the dividend. I bought Viacom CBS. They recently rebranded to Paramount Global. So I own them. And then I bought an initial public offering stock in Portillo's. So if you've ever been to the Chicago area, you've ever been to other areas like Orlando, they have locations now. They have them in Phoenix. But if you've been in Chicagoland, the Italian beef sandwich, woo, and the Chicago dogs at Portillo's are incredible. And so they recently hired the former CEO of P.F. Chang's, who helped launch that brand to global recognition, to expand them. So I'm investing in them. Yeah. I invested heavily. It's my single largest investment, new investment. Qualcomm, technology play. Robinhood, which is a fintech play, financial technology. And I gained 2 additional stock investments. Kyndryl was spun off. It's a technology company. It's a spinoff from IBM of some software applications. And Organon and Company, which is a spinoff from Merck. It's pharmaceutical brands that are out of protection, so they're generic drugs. And that's a income plan. So those are the ones I bought. I think it's like 13 things that I started, that I bought. Did I buy them all at once is a question I get a lot. No, I bought them over time. As I freed up capital that I said, hey, I want to deploy into my stock market investments, I bought them. I bought them in varying quantities. They're not all equal investments. Portillo's is my single largest one. And then I sold some stocks. And when I say I sold, it means I did sell some others where I trimmed positions, but I totally exited these companies. So I sold my entire position in Eli Lilly Corporation, made about 60% return in a year. So I sold it. They have a new Alzheimer's drug. I like them a lot, but I felt like it was time to take that money off the table. I sold 2 automobile companies, Ford Motor and General Motors. I could have gotten additional gains if I had kept them, but I am alarmed by the challenges that they have in their supply chain right now, and I felt like I could sell them and come back and buy them at a lower price later. That is proving to be true. I sold a S&P 500 index fund simply because I hold much more of them within my retirement accounts, and so this is just in my regular trading account, so I sold it. And I exited my Under Armour investment, which also went up a lot. And so that's what I sold. I sold Eli Lilly, Ford Motor Company, and General Motors, and SSGA, S&P 500, and Under Armour. So that's what I sold. Any questions on that?
That's good. I mean, we're hopeful that this is helpful for you just to hear. I mean, obviously, it's not like we're telling you, like, hey, you need to go out and buy these 11 stocks.
Yeah.
And you need to, like, if you have stocks in these 5 companies, you need to sell it right now. Like, that's not what we're saying at all. It's more of these are just what's worked for you and what you've done. And
yeah. And I share it to say, hey, I am buying and I am doing a little selling. As you can tell, I bought a lot more than I sold. But I think it's important for people to understand that it is not something that I did right away. Like when I first started, I bought a stock and went for like 3 years before buying another one. Right. So how did I become decent at this? Well, it's through experience, through time, through exposure, through learning, and through education. And that's part of what we teach in Fully Funded Life is being able to help people become comfortable with making these decisions or become comfortable with having these conversations with their financial investment advisor.
Yeah. I think as I'm hearing you talk about it, I'm just trying to think what like our listeners might be thinking. And I think one question they might have is what made you decide on those stocks to buy? So
that's a great question.
What was it that said like, this is the one I need to buy today? Or
and you know, in a podcast, we got like 7 more minutes in this episode. So I can't go into detail that I do for our Fully Funded Life community where we can release this almost like a course.
Yeah.
But my explanation of why I bought them is I generally have a filter for all of my stock purchases. And that is the company, does it have a great product or service? Is it profitably creating that product or service? Does it share those earnings back with me as an investor, as an owner of the company? And that's the dividend. And of that dividend, what is the dividend yield, which is the dollars they give me, it's out of their earnings, divided by the share price. And many of these, AT&T has a dividend near 6%. One Main Financial has a 4.5% dividend, and Organon and Company has the same. And so I like that. And so what I've seen in me is I've become a clear value investor. I invest for value. So I also look at, for every dollar of earnings the company has, what am I paying in a price for the share? It's called a price to earnings ratio. We explain that in our Fully Funded Life courses. But I use that to help guide me on value. And so I do make some guesses. You know, Portillo's, that's an initial public offering. But I'm not sure love is a strong enough word. I am infatuated with Portillo's. Anytime I go to Chicago, I go to Portillo's. I was in Fort Wayne speaking recently, and they have a Portillo's there. I literally set an alarm that reminded me 5 minutes after I was done preaching to go to Portillo's. And I went to Portillo's and I ordered the extra large Italian beef sandwich and a Chicago dog because I don't get, and the cheese fries, because it's absolutely incredible. It's a great, unbelievable quick service dining experience that it cannot be equivocated to anybody else. I mean, it's an experience, and everyone is different. They've got old cars and things inside. It's like going to a diner almost, but it's an amazing dining experience. So I invested in that. Robinhood is another one. They are not profitable. They're a fintech play. So I'm investing in them. And I'm going up and down in value, mostly down right now. But I invest in it. So I invested in that. So I also made some other types of investments. You want to hear about them? Mm-hmm. I bought some real estate. You know about this.
Yeah, are we surprised?
Yeah. So I completed 2 additional real estate acquisitions. I bought a commercial office property, a duplex. Mm-hmm. I bought it with a partner. And maybe we can show a picture of it. I think I have a picture here that we can show of it. And also, I bought some more land, some raw land, some timberland. Not the brand of shoes, not Timberland. I bought timber space land, just to be clear. 238 acres, and I also bought it with a partner. And I really want to just share this, that these are dreams of mine. One of them is a play so that as we grow as a company, we have potential to grow close to where our office is now. It's not attached to our office, but it's close. But it's also an income play. It's a type 2 oxen income play. Both sides of the office are rented out right now, producing income. But it is also securing our future, potentially. And then the timberland, well, I love land. No one who listens to me on any regular basis is surprised that I love being in the woods, chasing turkeys, hunting mushrooms, hiking, riding dirt bikes and 4-wheelers. I like it a lot. And it's one of the ways, that I connect with the creator more, is being in creation. And so I bought that with a partner. But as we're recording this podcast right now, I have a forester walking on that property right now, telling me what he thinks the value of that property is. And I think there's a lesson here. Do you think this person went and spent 2 days walking around on my property for free?
No.
With the expertise he has in his head on what the value of timber is, what the value of those trees are? No. And knowing what sawmills need what and what they're asking for. So I am paying money for that wisdom. Will I follow all that wisdom? Maybe not. But I'm paying to get wisdom because that's a Bible verse. Proverbs 4:7 says, the beginning of wisdom is this: get wisdom, though it cost all you have, get understanding. So I'm paying for that wisdom. And so I encourage you, you hear us mention a lot about fully funded life. You're paying for wisdom and, $129 for a year. You may be able to get a discount occasionally, but that's what it is. We have coaches that you can connect with, and they're not going to tell you what investment to choose, but they can look at what you have and help you understand what you have. They can also help you get a budget and address debt and help encourage you. And don't we need encouragement more than anybody? And so I also, in addition to real estate, by the way, I'm looking at a real estate deal right now, local. It's a 10-unit apartment complex. And I unless they have a lot of flexibility on price, I think they're asking way too much. And they know it. But we'll see. But I'm always looking at deals. Not that I'm going to do a deal every year, but because I want to be informed. And I like oxen. I also plunged into crypto. Do you own any crypto, Megan?
No, I don't.
Why?
I don't know. I just haven't taken that plunge that you've taken.
What is crypto?
I'm going to watch you do it.
Okay.
And then if it was...
Yeah, you can watch me rolling in the dough. No. I used Coinbase, and I perched. Here's the key word. What's the key word? Minimal.
Minimal.
What does minimal mean to you?
Very small.
Okay. So if you looked at what I invested, you would say minimal. Yeah. Everybody listening, when I say minimal, I mean a few $100s.
Yeah.
It's not thousands. Okay. And I purchased minimal amounts of Bitcoin, Ethereum, and Dogecoin. I also have some Stellar Lumens and Fetch.ai and some other ones that I don't even know what they are, but I earned them because Coinbase will pay you some tokens to learn what they are.
I just like the names.
Yeah, the names are crazy. So what are my prognostications for 2022 in the brief couple minutes we have? You ready?
Ready.
Drum roll. Let's go. Number one, I believe interest rate increases 4 to 6 times will happen in the next year. So from now till next March. That's 150 basis points. I think it'll be 25 basis points at a time. They say basis points, but whatever they say, the first 2 digits, there's a decimal point in front of it. So if they say 25 basis points, that means 0.25%. Okay? So I believe interest rates will go up 1.50%. That will affect every single type of lending you know. Mortgage lending, car lending, all of it will go up because of that. Also, it means your interest accounts on savings will go up too. Get fired up. So you may be able to make 1.5 to 2% interest on your savings soon. Won't keep pace with inflation. My second prognostication is that there will be continued inflation of basic materials and supplies, oil, construction materials, etc., due to the world conflict, rapid increase in demand, the sloughing of supply channels. There's less rig counts. Sloughing off. Have you ever heard of sloughing? It's a great word. No pipeline, international disagreements on oil production. There's wage pressures. When you see Target saying they're paying $15 to $24 an hour, there's going to be inflation. And there's going to be a pent-up demand for travel. I was just booking tickets for Universal Studios, and the tickets are this price. Now, they said it was this, but then when I selected the day, it was much more. Then I can get cuts in line, and the cuts in line cost more per person than the ticket per person.
That's crazy.
So I didn't pay for it. We're going to stand in line, my poor children. But there's a pent-up demand, and the reason they're charging that is they know they can get it. Mm-hmm. I also believe my third of 4 prognostications is that value stocks will be in favor again as investors run toward predictable profitability. So look at dividends and look to low price-to-earning ratios. The fourth thing is that consumers will be traveling again. They will be traveling again. COVID-19 is now a known entity with proven vaccines, therapeutics, and treatments. Pent-up demand plus healthy balance sheets, which means lots of savings, that equals profitability. But here's my big prediction. You ready? Dun, dun, dun. I believe there will be near zero stock market return. I predict a return to previous market levels. They have went down a little bit, but a near zero increase in market returns. The economy will be strong, but inflation will erode additional profitability. Residential real estate prices will begin to moderate. Commercial real estates and precious metals, particularly silver, I believe, are opportunity areas. And if you want to learn more, I will have a much more detailed update in Fully Funded Life, and it's free to all members. What's the quote for today? It's actually a verse.
Yes. So our verse for today is from 1 Timothy 6:6, and it says, "But godliness with contentment is great gain."
Yes. And I will tell you this. Above all else, guard your heart. Guard your heart. A good friend of mine, Alan, a great man of God outside of Rapid City, South Dakota, he once said this, and I just stole it from him. He said, godliness with contentment is always great gain. But great gain, well, now that's not always godly, nor does it always bring contentment. And I think the beautiful part of what we experience when things go down is it allows us all to do a heart check and say, what is my trust in? And I can tell you unequivocally, my trust is not in the stuff. I want to be an excellent steward of it. I want to make wise decisions. I don't want everyone to look back and say there were obvious things that I should have known that should have prevented me from doing that. But I will tell you this, it allows us to do a heart check. So how's your heart? And that's my update for the podcast. You want to learn more? Be a part of Fully Funded Life. We'll be glad to share that with you.
Yeah. All right. Our next episode is going to be on foundational elements of a ladder, and we're going to talk about Qs, so known, upcoming, but non-monthly expenses.
Yes. And if you like today's episode, or if you have an investment that you would like to share with us, comment on that on YouTube. Hit subscribe, click the little bell. Again, we also love to hear your success. Send us your success stories. You can email them to us at info@iwasbrokenowimnot.com. That's info@iwasbrokenowimnot.com. Or the quick and easy way is to share it with us on any of our social media platforms at YouTube or on Facebook. Who knows? Your success story may just be featured on one of our upcoming episodes. Hey, until then, make sure you're investing this week. Make sure you're reflecting on why you're investing. Do that heart check. And we'll see you next week to talk about known upcoming expenses. Get fired up, everybody.
Thanks so much for listening to this episode of the Monday Money Tip Podcast, presented by I Was Broke, Now I'm Not. If you enjoyed today's episode, please leave a review and subscribe. And for more great content and to stay up to date, visit iwbnin.com. We'll catch you next time.